GDP numbers should clear the path. Hello and welcome to our weekly outlook. The market still worries about the inflation rates and the possibility of the stricter policies, while the Federal Reserve still emphasizes that they will keep their accommodative policies. However, we have to wait and see the GDP numbers from the Germany and United States to ensure what is going on in a recovery path. Let's go to the details and see what we are waiting for in a week ahead. Number 1. German GDP and iPhone numbers. Tuesday, ahead of anything else, we have to closely follow the GDP number of the Eurozone's biggest economy. We are not expecting any changes in a 1.7% decrease of the primary numbers for the first quarter and 3.3% contraction yearly basis. Even if it is less harmful than the earlier expectations, it is still negative and tells us that the Germany is still experiencing an economic recession. Besides that, the business sentiment index number also must be closely watched, as this important indicator will show the current condition and the business expectations in Germany. Since the recovery in the Eurozone is lower than expected and increasing inflation is supposed to make some changes in the Federal Reserve policy, we are hoping to see the weaker euro against US dollar, which means the return in the Euro-USD chart. Number 2. New Zealand and Reserve Bank meeting. New Zealand was one of the leading countries in a virus elimination that helped them in their economic recovery. We expect to see them join Norway and Canada beginning to plan rate raise, while we are not expecting any changes at the 0.25% interest rate and the market pricing rate raise since 2022. Reserve Bank of the New Zealand probably may not go so far as just speaking about the possible tapering of the bond purchasing and interest rate raising timetable. As we can see in the chart, Kiwi was under pressure last week, and we are expecting to see the weaker currency in New Zealand if the central bank's policy will hold the current pressure on it. Significantly, if the pairing can breach under the 0.70 level. Number 3. US GDP numbers. As every Thursday, jobless claims data will be essential to see how weekly improvement in the labor markets are going on. However, this week, the final numbers of the first quarter data for the gross domestic products also gets investors' attention. We are expecting to see a 6.7% improvement, more extensive than the initial 6.4% estimates. These data shows the impact of vaccination distribution and 2 rounds of the fiscal stimulus during the first quarter. Upbeat data, besides the higher inflations, will be in to support the fan of the stricter policies as well as the US dollar rate. Even thought, if the technical US dollar index moves in a clear downtrend, upbeat data expected to support the greenback, especially if the index can return back above 91 level. And finally, number 4, personal income and spending data. After all, the critical data to watch in the coming week is the Friday's US personal income and spending data, which include the PCE index. The Fed's preferred inflation measures for its 2% flexible average target is the core PCE number, excluding the food and energy data. In the last 12 months till March, this number raised to 1.8%. The importance of this data is because the Fed will be tested seriously whether they keep the same asset purchase level or we have to wait for the return in their policies. Since the higher than expected data increase the likelihood of the change in the Federal Reserve policies, and in this case we have to wait for the sharp fall in the S&P 500 index. And weaker data supposed to push the stock market to reach higher numbers. Thanks for watching this video. Hope you are having an amazing weekend.